This is our Forex blog for June 14th, 2011. And like most days, we really want to buy the strong currencies against the weakest ones. Today, the pound was just incredibly strong following late yesterday's and late last night's move up. The euro was strong. And unfortunately, the weekly trend of the euro is down. The monthly trend just shifted up at 3 o'clock. So today was not the easiest day to trade because in a perfect day, an easy day, you have a currency that's super weak like the yen, and the weekly trend's down, which it is. But you also want the monthly trend to be down too. Last night the yen was weak for a while, then had very little strength for an hour, and usually you can assume that the weakness will come back. So at 3 o'clock, the euro was strong. The pound was really strong even coming up to that point. And as you can see, as I scroll this back, so coming up to 3, a really high probability trade would be looking for euro yen and pound yen buys. Here's 3 o'clock, had a little bit of a pullback and a little double bottom right here. Here's my Fibonacci profit target level, and it's one of the reasons that I sold this currency myself later, and I'll go over that trade in our regular class in more detail. But you might have got into a trade here. It was extremely strong, so you're really better off kind of waiting for either a double top or for the strength to kind of subside like this. You could certainly get in when it breaks this level here, or especially when it double tops up here and breaks, you can have your stop just a few pips above the high with a tiny risk. And after a currency's gone up that far, usually you can draw your fibs on there, and it almost always will pull back at least 38%. So your minimum profit target's 80, you're short somewhere around 10. You have a 30 pip potential, and you can see it fell a little bit more, even if you got out right here at the 50% retracement. If you hung on to the hourly moving average or a Fibonacci area with a bunch of counter trend buy signals, or waited to get out here when it made a 1, 2, 3 low, you had a very nice win. And because it was so strong earlier, when you get a nice little 1, 2, 3 pattern or a double bottom right at a support level, previous day's high, hourly moving average, Fibonacci area, we have a 1, 2, 3 pattern. This is a pretty high probability buy when it breaks back up right here. Now this is a signal that caused me to get short up here. It's a 4-hour trend reversal signal. You can see that 240-minute trend reversal sell. When you get one of these patterns, the move is over usually short term, but it doesn't always reverse immediately. Sometimes it is immediately, and then other times it's 3 to 5 hours later. So when it came back up to the highs, I got short a little bit myself around 93. Kind of came up here and I got short somewhere down here. Selling the bid obviously. I added to my position at 132.10 or no 132.15. I had a limit order out there because that's where there's a monthly pivot. There's a 20-day moving average above there. Above that, there's the previous week's high. There's major sell areas right here, and it's extended. It's up too much. It's very likely to reverse. And these signals again are not always immediate. They're a much higher probability when they're at and above the upper containment bands. We had another trend reversal triangle, which oftentimes is the end almost to the minute of the move. I was already short way hour and a half before that, but if I was trading and saw that, I would have got into a trade here and caught that wave down anyway. But when you get these signals, usually the market reverses. You never know exactly when, and sometimes it's hours later. So I kind of got into a position here, another one at 15, added another one at 9, and when I saw it shoot up here to the 30 area, I did add 2 more lots up here at 29. So my average price was 132.15 is what it averaged out to. And when it fell down, I got an alert on my phone. I wasn't even watching it, and so I exited through my phone at 131.90 with a nice 25 pip move. This signal took from this time right here 8 to 11. It took 3 hours. I wasn't short here. I got short about an hour later. It took 2 hours to come to fruition. And if it can rally back up here again, you want to get in again. And specifically, if it goes higher, you want to sell every move up. I would draw my fibs on this. Wherever that profit target is, 131.50 to 80, you want to get into another scaling position up there, and you'll probably make 20 to 50 pips on it later. So there's a trade for you later today if that comes to fruition. But other than that, We also see we have a euro dollar here, euro yen, also very likely to go up. You can see it broke out of this narrow range pattern. Those tend to be trend trades, and if the market pulls back without much momentum to the downside, or it loses some of its weakness, as of right here in this bar, you go long when it goes back up right here. You're long this at 115.85, and most of the time the market's going to stall at the upper fib level. This would have been your first profit target, the previous swing high in one of my Fibonacci areas, but it shot through there, and usually it ends up and it dies down above the upper containment bands. So it's a great place to get out of your trade for a nice 40 pip move. And then you also have a beautiful Elliott two-wave pullback. Very strong trend. Usually when they've gone up too much, they'll pull back and then go up and then pull back again. The second wave is where you want to look to buy. So you draw your fibs on the first wave down. And you can see it didn't quite hit it here, and it went down underneath it here. As soon as that weakness disappears right here on this bar, you buy the breakout of these little couple sideways bars, and you're long here at 115.75 or 80. And it kind of went up. I would have got out of half my trade here, and usually it makes a two-wave move, so you can draw your fibs on the first wave and look to get out maybe the second part up here at 116.24. I wouldn't have hung on for this extra 30 pip move, but the Elliott two-wave pullback would have found 20 pips on half and maybe 50 pips on the other half. So you netted 35 pips on that trade while risking less than 10 pips, and that's really the key to trading. Small losses, big wins, and usually more wins than losses if you trade right. Super weak Swiss last night. However, the weekly and monthly trend is very strong. You would have wanted to trade that against one of the stronger pairs. Last night the euro was strong, the pound was strong. I would have preferred trading it with the pound because the weekly trend had shifted up and the daily trend was incredibly strong. Coming up to today, the pound was very strong, and I think yesterday in the afternoon it was incredibly strong. So the pound Swiss would have been a phenomenal one to look for buys. Let's bring it up here on your chart. And if you bought every little pullback, you had some small wins here. Eventually, it did break out and exploded up. I don't see really too many trades here. Most of us probably would have given up on this. I don't think I would have taken that trade. If you do take trades like this, use our our new FX IntelliStop, and it shows you exactly when to get out of the trade. So if you were long here when it broke out of that little sideways range, it got you out right up here at 41, about 20 pips from the high. And it also is a pretty good entry system. It had you long right here at 37.56. It never got stopped out, and then it took off. If you were expecting to buy pullbacks, you might have a small loss, break even, small loss, huge win. You can use it to time. You don't always, catch the first move. Let's look at the euro yen and euro dollar too. As far as this goes, look at this pullback here. It got you in right here, just a few pips, beyond what I would have got in at 76. I might have got in this at 71, a few pips earlier, but it also kept you in this trade all the way to the high, and you're out of this thing at 50, catching all but 16 pips of the move. If you can catch 30 to 50% of a move, that's phenomenal. Catching 80% of it's unheard of, and this tool uses our statistical tools to allow you to get into these trades. Look at the ones earlier when it started to trend up. You bought right here, small profit, bought right here, small profit, bought right here at 85. Very nice profit. It looks like you got out here with about 30 pips. And if you're looking for a counter trend trade, let's say you sold this double top right here. This makes a great tool to keep you into the trend, or the counter trend in this case, all the way down here. Where you might have wanted to flip because the trend was up previously. This is a nice two-wave pullback, as well as the euro dollar was. Although I think I already went over this example. But anyway, that's how you use these tools to hang on to the big moves so that you have big wins, and that gets rid of all the tiny little losses of 3 pips here, break even here, 5 pip loss here, and the occasional full loss of 10 or 12 pips.